Are your savings stagnant no matter how hard you work? Make money work for you with MIDF Invest, an easier, safer way to grow your wealth by investing in stocks and ETFs from over 6,000 US companies. The bank is regulated by Securities Commission for your peace of mind, so you can keep your money safe while keeping it busy.
Hi, let me show you how easy it is to buy a stock from the MIDF Invest app. To start, download the MIDF app from the Play Store or the App Store. Registering your account with us will be very easy, and once your account is approved, you can click the trade button to begin your investment journey. Search for the stock that you like to buy, customize your stock buying options, tap on the Place Order button, and finally tap the Confirm button. And congratulations, you have purchased your first stock on the MIDF Invest app.
Want to earn from some of the world's biggest companies? Let your money work abroad. With MIDF Invest, you can invest in stocks and ETFs from over 6,000 US companies, including a wide range of Sharia-compliant stocks. Have questions? You can talk to our experienced happiness agents anytime. So, if your savings are still sleeping on the job, it's time to make them work a little harder.
Hi, welcome everyone to this week's webinar. This will be the second installment for our oil and gas webinar. My name will be Adnan Hasbi. I will be your host for today. And first and foremost, confession, I am actually really glad that we are having this webinar today. Part of the reasons why is the stock market has been very volatile. There were a couple of assets which were swinging from left to right, up and down. So I think as a beginner, it must be a very scary time actually. And before we continue, let me just do a quick introduction about myself. Basically, for those who are new to this webinar, just want to do a quick introduction. My name is Adnan Hasbi, as per the picture, and I've been in the financial industry for close to 20 years, right? Whereby I started my career as an auditor. Subsequently, I moved in investment banking, where I worked as an analyst for more than a decade, right? And my time as an analyst, I use my main role basically is to help fund managers pick stocks, right? And right now I am with MIDF and I'm with you guys today, and we are talking a little bit about how to, I guess, get better returns from our investments. So how this webinar is going to be divided is going to be in 3 sections, right? But prior to that, like I said, for those who are new to this, just in the comment section, type number 1 if this is your first time, right? And type number 2 if you guys have been in this webinar before, right? While the answers are coming in, basically how this webinar will be structured is that it will be broken down into 3 segments, right? Segment number 1 is we are going to talk a little bit on what we talked about last week. So it's an overall recap, right? So for those who are here, for those who could not make it for the last webinar, this will be very beneficial, basically, right? That's the first thing. The second thing is that even though if you guys came for the previous webinar for last week, I know oil and gas is a very technical sector, right? And basically, if we are an informed investor, it is much easier to know when to buy, when to sell, what to do every time when the market moves up, down, left, and right, right? And how certain pieces of news may impact your investments. To Bruce Lee, oh, this is the second time. Thank you, sir. Thank you. So we're going to talk a little bit about what happened last week, what we talked a little bit about last week, right? So to recap, if we look at this chart on the right-hand side, we will see that the KLCI had a very big dip, right? And this was during 2020, right? And during that time, just like to ask you guys, if you guys still remember, what happened during the big dip? Why did KLCI dip significantly? Let's wait for your answers. Right. So part of the reasons why it dipped was that there was a sell down, right? There was a major sell down during this point in time. And this was during the whole PKP, right? And at that point in time, what basically happens is this. I'll explain to you how to decipher and why the market went up and went down, right? So what happened was, if there was a controlled movement, people cannot go out. And when they couldn't go out, they could not interact with businesses. And when businesses do not make that much of sales, they will make losses. So what happened is, with the expected drop in earnings, a lot of people just sold their stakes within the stock market, right? But with every crisis, there is definitely an opportunity, right? And I guess my question to you guys is, what happened during the rally? So you see this actually move down quite significantly downwards, right? What happened during the lowest point to the highest point? There was one major event which actually caught a lot of people's imagination with regards to investing. Correct, correct. At that point in time, there were a lot of people which was staying at home. A lot of people started to invest a little bit of their money. And in fact, Bursa Malaysia also had a survey which said that before this, there were not many retail players within the market. But during the whole MCO, there were a lot of retail players. Retail players are people like me and yourself, right? If you sit in front of PC and we were to buy and sell shares, right, we will be retail players. So at that point in time, there was a significant amount of retail players. That's the second thing. And the third thing was that many people started to invest in very, I guess, lucrative, or they started to invest in the glove sector, basically, right? So at that point in time, it was very, very lucrative, where the glove stocks actually moved up quite significantly. But having said that, this will tie in our webinar, right? For anyone to make money, basically, right, the simple thumb of rule is basically buy low and sell high, right? If you are chasing a stock as it goes upwards, there is a risk that it might turn against you, and we will have to. So, I mean, basically, our intention is not to buy high and sell low, right, and make losses, right? But because the stock actually rallies quite a bit, we don't know when it's going to turn, right? So if the market turns against our favor, then we will be caught with stocks which are really expensive, and that's where many people make losses, right? This will tie in very nicely with regards to the stock pick or the investment pick, which I made last week, right? So that is point number one. The second thing is like during the whole rally for Malaysia, right? What happened in the United States was we could see a big rally, especially for the tech stocks, right? And basically, governments from all over the world, what they were trying to do is they were trying to shore up the market or shore up confidence, right, amongst its people, right? And at that point in time, what happened was the US, I guess, government, they started printing money, or they started, I guess they started doing handouts, right? And when they started printing money, and then when they started doing printouts, what happened was we could see that a significant amount of money was invested in the following assets. Remember cryptocurrency, the Bitcoins, and also all the crypto coins. At that point in time, it was very, almost everyone wanted to get a piece of the Bitcoin action. That's the first thing. Second thing was even stocks like Tesla. Over here, we can see the light blue chart, right? All of these are in percentage. We could see that Tesla moved up quite significantly. And with handouts from the government, what a lot of people were doing is that we have to remember at that point in time, like Malaysia, even the United States, there were a lot of people which were in between jobs and also unemployed. So at that point in time, many people wanted to make money from investing. And this is where a lot of money just pumped into the market, right? And I guess right now, this is where I'll teach you some of my knowledge working in the industry for about 15 years, right? So I'll help navigate you guys how to actually, navigate the market, basically. I'll give you some ideas and hopefully we can use that ideas to your advantage, right? So basically what happened was there was a lot of money being invested in the tech sector, right? We could see that Tesla was moved quite significantly up and it moved quite significantly down. Again, like I said, we always want to catch it at the lowest. Remember this point which I always make. Buy low, sell high. Buy low, sell high. As long as we do that, we will make profits, basically, right? But what a lot of people did was during this time is that they wanted to chase the, I guess they wanted to chase the stock as it goes up. But again, no one can time the market, right? It's difficult to time the market. Even me, I've been working, in this industry for 15 years, right? Most times if I start timing the market, that's where I make losses, basically. So the thing that I would like to appeal to you is basically this, right? We are basically buying businesses and we want to buy the business when it's cheap, right? So what happened is that in Malaysia, of course, with the money printing, that affected everything across the globe, right? As money was being printed, money would be valueless, right? The whole thing of it all, before this, there was maybe 100, say, assuming if it's a small economy, right? And in that small economy, there is only $100 in this small little example. Right now, if the government were to print out maybe 3 times more money, right? So the money circulated within the economy will be 3 times more, right? And imagine if there is a product like crude oil, which is finite, right? So right now you have too much of money circulating in the markets, chasing very finite resources. And that's one of the reasons why we could see that prices of not only crude oil went up, but prices of food, right? So over here, this is an example of what happened over in Malaysia. We could see things like meat on the left-hand side, right? This was all in 2022, right? Meat prices 9.2%. And then in August, it was 9.9. I mean, it was a very scary time, actually. And at that point in time, I also talked a little bit about, and I asked you guys whether your investments, right? We did a small study, me and my research assistant, and we found out that a lot of products and a lot of food items actually went up by 30% on average, right? 30% on average, right? So, but having said that, we still have an old school mindset in investing, right? So for those that have not even tried investing, they will put their money in fixed deposit, right? So if inflation was 30%, and if the return on our fixed deposit was about 4%, right? If we were to extrapolate, or if we were to forward forecast, every year if we lose about 20% of the value of our money, so by the time we retire, right, that money would shrink in value and our wealth will shrink in value, right? And yeah, that's a scary thing, basically, right? So, and we thought that, many people thought that in 2022, it will be the end of all of this inflation, right? But in 2023, we looked at the prices of food items, and this was extracted from the star, basically. We can see the top item, cucumber, January 13th of this year, it was 180. February 2023, it was 650. So that was how much food item and inflation impacted everyone's lifestyle. And basically, if I were to ask you guys, maybe 10 years ago, was it possible to find roti canai below 1 ringgit? Was it possible? Right, correct. It was very, very possible to find roti canai below 1 ringgit, right? And the whole thing of it all is today, is it possible to find roti canai for below one ringgit? In KL, maybe out of KL, somewhere in maybe Perlis or Kedah, maybe can, but in KL or, no, you know what, wherever you guys are staying right now, is it possible to find roti canai at below 1 ringgit? Correct. And part of the reasons why is that inflation has been eating our wealth, right? So assuming right now it costs us about 2 ringgit to have lunch, right? But because of inflation, prices of everything goes up, right? Maybe right now to have the same food for lunch, it probably costs about 10 ringgit, right? And that's 4 times in the span of 10 years. So yeah, I let that thought sink in, basically, right? So basically, if we are investing the old way, putting our money in FD, right? And with inflation being so high and our returns being relatively low, what will tend to happen is that we will lose value for our savings. And these savings will in turn be what we will retire on. So eventually, if our savings do not catch up with inflation, once we retire, it would not be much, basically, right? So basically, this is where I came up, or I shared these ideas with everyone in last week's webinar. And in last week's webinar, I talked a little bit about investing in stocks which will benefit from inflation, right? And what sector would benefit the most when prices of everything and commodities goes up is basically the oil and gas sector, right? So that's what we talked a little bit about last week, right? And I broke the sector into three: upstream, midstream, and downstream, right? So as I said, to recap, imagine a stream and it's going downwards, right? So the upstream is where you get the source of the water, right? And for upstream in oil and gas, is basically where we get the crude oil. The midstream is where we process the crude oil and store the crude oil. That's the midstream. The downstream is when we go to our Petronas and pump it in our car, right? That's the downstream, basically. So out of curiosity, right? If crude oil prices were to go up, type 1, if you think the upstream industry will benefit the most, type 2, if you think the midstream will benefit the most, and type 3, if you think the downstream would benefit the most. So we talked a teaser, a hint, we talked about this last week. All right, that is correct. Basically, if the prices of crude oil were to go up, amongst the three streams, the upstream will benefit. Why? Upstream will have control of the crude oil. And if inflation were to happen, the prices of crude oil would go up, right? So I want us to remember this. Upstream players would benefit when crude oil prices goes up, right? So this was what we talked a little bit about. My research assistant helped simplify everything, right? So the first thing is that by investing in crude oil, we will be able to diversify our holdings. Remember how Bitcoin, Tesla, all of this were very popular. Imagine if we had 100% of our wealth in maybe a lot of these asset classes. What will happen is that we would, and if we bought it at the wrong time, right, basically. So what will happen is maybe we would, I guess, make some losses, right? So basically, by investing in oil and gas, right, we are introducing, or I'm introducing to you guys, another way of investing and another way of diversification or diversifying your investments, right? So that way, if the prices of a particular asset, say if asset A were to go down by 50%, while asset B were to go up by maybe 30%, net, you will have a negative 20%, basically, right? So by diversifying, right, you would lessen the cushion, or there's a cushion to lessen any blows on your portfolio. So that's number one. Number two, and this is the main reason why we like the oil and gas sector, is that you're basically investing in assets which will appreciate during an inflation, right? So, and as we could see, the returns were double digits, right? And in 2 years, the returns were triple digits in the, I think it was 120, 130. I think we talked about it last week, right? So within 2 years, so I mean, that's not bad returns, basically, right? And the final thing of why we like this sector is that it's inelastic. The demand is inelastic. I think I give this example, right? Where in the mornings when we wake up, right, we use a toothbrush. Plastics is made out of oil and gas, out of crude oil, right? So they process it and then they make it. They have this thing called petrochemicals, and from petrochemicals, they actually make plastics, right? And as we enter our cars and we drive to the office, right, transportation will need crude oil, will need refined petroleum, right? So even there, we use crude oil. And then when we're in our office, we turn on the lights and we turn on the aircons and whatnot. Gas is a feedstock for electricity. So basically, oil and gas is important for us in today's economy. It's the lifeblood for a lot of major cities, right? So remember this, right? Remember point 2, where we want to make sure every time when there's an inflation, right, our wealth value, right, is stored. We don't want to have like things going up by 30% and our wealth growing by 2% or 3% or 4%, right? We want our wealth to grow in tandem, right? Or we want our wealth to grow even higher than inflation rates. And that's one of the reasons why I guess I shared this idea, basically, right? So having said that, right, I mean, not everything is fine and dandy, right? So there's also the risk element for everything, basically, right? And there's the environmental factors, basically, right? Over here, last week, there were a couple of people asking with regards to ESG, right? ESG. And ESG is a filter where it started many years ago as an ethical filter, right? Where people would stay away from things which are prohibited, right? So, and then eventually it evolved, and today we have ESG. So E stands for environment, S stands for social, and G stands for governance. There was a couple of questions with regards to the ESG-ness of the oil and gas guys, right? So over here for this week, I put it up as a slide. One of the risks could be environmental risk, basically, right? Another should be geopolitical. And with what's happening over in Russia, between Russia and Ukraine, we could see that the prices of crude oil increase. And when prices of crude oil increases, every other thing would inflate in terms of dollar amount. And that's where the value of our money would drop, right? So I think this chart is very important. If anything, please pay attention to this only one chart, basically, right? And why I call buy for this particular asset. And I'll tell you what is the name of the asset class, right? Basically, what happened in 2008 was that crude oil prices rose quite significantly. Next question is, why did it increase quite significantly? There were two things. Number one, there was certain conflicts in Iraq, where at that point in time, there was civil war, and Iraq was one of the big oil and gas players. And second thing, there was a conflict between Russia and Georgia also. So both of these, I think, are the OPEC plus countries. And should there be a disruption in supply, what will happen is that prices will shoot up, basically. They are not enough to supply within the market, so therefore there is an increase. Another thing that happened during 2008 was that there was a stimulus package in the United States. So these two things happened. Right, so 2022, what happened was two things also, Russia and Ukraine. And there was another stimulus package whereby the government gave it during the pandemic. And we see a sharp spike for 2022. And in last week's webinar, I said, look at this particular asset class, which I will show you again. But basically, why I said we want to buy the sector, remember what I said, buy low and sell high. Buy low and sell high. So basically, if you notice that the oil and gas actually swings up, swings down, swings up, swings down. And right now, where is oil and gas going? It's going downwards. So we want to buy it at a discount. We don't want to buy it as it goes up because we don't know when is the highest point. The next point which I said is this term. Remember this two, we are as good as gold. Dollar cost averaging. Dollar cost averaging. This is where we do not use all our bullets, or we do not shoot everything at one point in time. No. What we want to do is we want to keep on buying as it goes down. As it goes lower and lower and lower, this is where you get a discount on your stocks as it goes down lower and lower and lower and lower. And always remember that there's a swing in this sector. It's actually a very easy play, this sector. You can see it actually goes up, comes down, goes up, comes down, goes up, comes down, right? It's a very easy play for this sector, right? So right now, with things going down, I ask you, what should we do? That's right, buy on discount. Well, okay, at least you guys are getting it. Cool, cool. Right. So over here, again, to recap, this is a hedge against inflation, right? So what we want to do is we want to buy assets that would benefit from the inflation, right? I want to share this particular slide before I show I show you what we talked about, or what asset we talked about last week, right? But this is a very interesting graph. Basically, it looks like it crosses when the S&P 500 goes up, this comes down, and when this comes down, S&P 500 goes up, right? What this basically shows is this, right? I will tell you what it shows. Every time when crude oil prices goes up, what will happen is inflation would kick in the economy. Last year, when there was very high inflation, what did central banks do? Or what did Bank Negara do? So it's a history lesson. Brownie points for those who got the answer, basically. What did Bank Negara do? Correct. They raised OPR rates. Basically, when there's inflation, what some central banks do is they will raise OPR rates. And why they raise OPR rates is to slow down economic activity, is to slow down the demand of certain products, right? So over here, if we notice, right, as CRB is, it measures commodity prices, right? So if commodity prices were to go up, what will happen is that central banks will raise interest rates. And then when economic activity slows down, demand for certain products will slow down. Recall what I said about oil and gas. Recall about how I said that this is the fuel of the modern economy. So if economic activity slows down, then we will demand less fuel, basically, right? So, and the stock which I was talking about, right, is XOP, or the ETF which I'm talking about was XOP, right? So basically what this is, it follows the pattern of the oil and gas, or crude oil prices, right? And as I mentioned to you, as things were to go down, or if crude oil were to go down, what we want to do is we want to do dollar cost averaging, right? And in this chart, right, we could see that it swings, right? The next question is, is this basically, right? Why do we think that it might swing, right? Will the demand ever drop, right? So basically, as I mentioned, right, this is the fuel for the modern day economy, right? And there was also a question with regards to EV vehicles. At this point in time, EV vehicles are still not in mass adoption, right? The mass adoption is still the combustion engine, which uses petrol, right? And also, a lot of people are still using gas to energize or to give energy throughout the whole economy, right? So as long as there is as long as EV vehicles are still expensive, right, then there still be a demand for the combustion engine, which uses petrol, right? Okay, so that was what we talked a little bit about last week, to recap. Now, I guess moving on, right? Remember how I said in the beginning of the webinar, I said, I'm so glad, we are doing this webinar. And one of the reasons why is that the financial markets was a bit volatile, right? And if I were to ask you, what happened last week which made financial markets volatile? Again, brownie points from me to you lah. I just say good job, basically lah. But yeah, what happened in the financial markets for last week? Correct. What happened last week was it impacted a lot of things, basically, right? There was this thing called SVB, or Silicon Valley Bank, right? And then there was Signature Bank. If there is a contagion effect on the market, if banks were to start collapsing, right? People are going to do a bank run because they lose confidence with the bank, right? And then they will start wanting to withdraw. And once major withdrawal happens, what will happen is that some banks, their balance sheet are not strong enough for this, right? So what will happen is, some, especially in US and Europe, right? And in Europe, there was this institution called Credit Suisse, right? And at one time, Credit Suisse was quite highly looked after, was quite a sought organization, basically, right? Especially when it comes to investment banking, right? They are a Swiss bank, and even them also. And to put things into perspective, right? Credit Suisse is the 15th largest bank in the world, right? So it was quite scary times, basically, right? And if you notice, right? Oh, this chart over here, both Dow Jones and NASDAQ had a drop. Both these sectors had a drop. Okay, so I want to come to point number 2. Okay, guys, listen up. This is very, very important. I'm going to say this really slow, but this is very important. Basically, if the economies in the US and also Europe, if they want to do a bailout, and should they start printing money, as I mentioned a while ago, the value of the dollar or the value of money would be worth less. And because crude oil is very finite, chances are, if there's going to be another spike in crude oil prices, it could be much higher than the previous highs. Or if there is another upswing for crude oil prices, it could maybe surpass its previous highs. So, and another thing, basically, right? Since we're here, I'm going to share this with you. If more money printing is happening, what's going to happen? Money is going to be worth less. I suspect inflation would be very prevalent in our economies, right? So just, take some measures so that your wealth is protected, right? If we are still, investing in the old school way, in maybe in fixed deposits, making 4 or 5%, right? Yeah, I mean, my small little 2 cents, maybe look towards moving into assets which gives better returns, basically, right? Right, so I see a question. Thank you, sir, anonymous attendee. How can we buy on the dip? Okay, that's a really good question. But at the same time, we want to prevent from catching the knife, right? That's a very, very good question, right? So basically, this chart over here shows that crude oil prices has been dropping, right? So whether it's going to drop down or whether it's going to swing up, we don't know. So the question is, if we were to buy very early on, how do we not, I guess, bleed so much, right? So for this, I would again suggest dollar cost averaging, right? So what we want to do is we want to our ammunition, our attacking ammunition. We want to make sure there's maybe 4 or 5 tranches as we buy things, right? So what we want to do is as the thing goes down, we can dollar cost average downwards. And then as it goes up, we can sell it, right? So that's one strategy. Or there's another strategy, which is always buy. Goes up, goes down, goes sideways, just buy. But for the oil and gas sector, because it's relatively, if you notice the swings, right, goes up, comes down, goes up, comes down. Right now it's going down. As I mentioned to you, 2 indicators we have to remember. Should the banks or should US and Europe start money printing, there could be an inflation. And money is going to be worth less, basically. Second thing is, as I said, always buy at a discount. What we want to do is, always remember, buy low and sell high, right? So right now it's kind of dropping, right? So while it's dropping, of course, at times we be worried. I said, hey, should I go now? But because, it might drop even further, right? That's why I say dollar cost averaging, right? So, and over here, we can see this chart, right? Okay, I hope I answered the question. Thank you so much. That was a very good question. So, right. The next thing I would like to talk a little bit about is right now, every time when there is uncertainty, there's one asset class that always does well. And I think if you guys are in social media, or you look at YouTube, or maybe if you look at maybe TikTok, or maybe in Twitter, right? Everyone that's selling gold right now is talking about how gold is the next best thing, right? And for this, basically, it's always the effect, basically. Every time when there's uncertainty, gold prices goes up, right? So over here, I'd like to introduce to you guys, there's this ETF, which actually sells gold, right? And I think it's GLD, I think, for the ETF, right? So, but having said that, if you ask me, I would always want to buy low and sell high, right? So I know I got some friends over here, right? And I know at one time when Air Asia was 50 cents, right? I know some of you guys, I was talking to some of you guys, I was like, hey, I think it's a good time to buy. And truthfully, the best time to buy Air Asia when it was 50 cents. Right now, as it goes up to 90 to 1 ringgit, right? Everyone is asking me whether they should buy right now. No lah. Again, like I said, I always have this philosophy: buy at a super discount, sell it high. Buy at a super discount, sell it high, right? So at this point in time, if you look at crude oil prices and if you look at what's happening, I would maybe put my money in discounted assets, right? And the name of that particular ETF is XOP. XOP, right? If you guys are interested, right? And what an ETF does is basically, it's a collection of different companies that are involved within the oil and gas sector. So today, we're going to talk a little bit about single stocks, right? So I'm going to talk a little bit about Exxon, Chevron, Conoco, and Devon Energy, right? So I'm going to, I guess, teach you the inner workings of how is it to be an analyst. And hopefully, throughout this whole journey, you guys understand how analysts pick stocks. And with that, eventually, you guys will be amazing stock pickers. So that's the overall goal, right? So basically, if we look at Exxon, in terms of size, right, they are about 411 billion, 411 billion, right? These are the market size. Chevron is about 290 billion, Conoco is about 117 billion, and Devon is about 30 billion. Does smaller cap stocks mean they are better investment rather than larger cap stocks? So in this small little discussion, we're going to talk a little bit about why sometimes smaller cap are better than the larger caps, right? So the thing with Exxon, right? They are an integrated oil and gas. So integrated meaning to say that they are involved in the upstream, midstream, and downstream, right? Chevron also is integrated, so they are involved in the upstream, midstream, and downstream. And remember what I said about upstream, guys. If prices of crude oil were to increase, the upstream players would benefit the most. So this would be COP and Devon, right? But again, look at their sizes. They're relatively small, right? So let's move in. So we're going to look at three main items for our stock pick, right? Number one, right? This is upside lah, basically, right? At this point in time, these are the stock prices lah, right? Devon Energy is about 47, ConocoPhillips about 96.16, Chevron is about 154, and Exxon is about 102. Target price is what the analysts forecast in terms of the future price for that stock in 1 year, right? So if you look at stocks like Exxon, even though it's a big company, the upside is 23.8%. So Exxon is a safe bet, right? Since they own all three, since they are big and they own upstream, midstream, downstream. But I would rather buy a smaller player, and if the crude oil prices were to swing upwards, they would benefit the most. Why? They are not involved in many different things. They are just involved in only one thing, which is extracting crude oil. And if crude oil prices were to go up, their stock would fly lah, basically, right? So that's 47.4%. So before we buy a stock, right, I'm not saying one is better than the other. Basically, what I'm saying is it's up to us. If you want to be a safe investor, buy Exxon, right? Exxon, they used to own this petrol pump, station minyak lah. It's called Esso. Right now, there's no more Esso, ESSO, right? If any of you guys heard it lah. So I'm basically carbon dating myself lah, right? Right. They used to, and yeah, that's integrated oil and gas players for you lah. So let me answer some questions. Yeah, gold price has gone up. Do you foresee further upside in the next few months? Again, it's very difficult for us to say, right? And also I'm more of an equity analyst, right? But if there is printing of money, and if there is more uncertainty, more money will be pulled out in the paper markets, basically your fixed incomes and also your equity, and it will go into gold. And if you look at gold prices right now, it has been doing pretty okay with a lot of uncertainty happening in the market, right? Thank you for that question. Thank you so much. Okay, if something is available at discounts, how do we guarantee it doesn't further slip? There's no guarantee. Investing, there's no guarantee. And basically, how we want to do it is we always would look at our downside risk. And that's one of the reasons why I keep saying, look at the risk which is involved. The risk of oil and gas is if the prices of crude oil were to go down. And I expect crude oil prices to go down. As it's going to go down, this is the best time for us to buy on discount. Remember the story of Air Asia? That was during the whole pandemic. It was 2020. And I still remember a lot of my friends, we were all worried, you know. The whole thing is of it all is during the pandemic, right? It was so much of fear, right? So what I did, right, for me, is I will keep a very small amount of money towards things which I foresee it being very volatile, right? So I will have a very small pot of money to buy things which I think it's very risky, right? And for me, truth be told, I have a big chunk in ESB, right? So right now, with the markets or with inflation flying so high, right? more and more I'm thinking I should start shifting my money into much more better performing assets. Occidental Petroleum. Yeah. So for this small webinar, we're just going to talk a little bit about the well-known names, right? Yeah, thank you. So that's later, I'm going to give you guys a questionnaire to fill up, right? Because a lot of this, we would like feedback from you guys now. So once we get feedback, right, we can improve it even further, right? So yeah, for this one, I'm just mentioning all the very known names. Okay, how do we set target price? Okay, so the target price is basically what the analyst forecasts for the stock. What the analyst forecasts for the stock, right? And this is what we basically did, or what my my research analyst did was basically this. Looked at how many buys for that particular stock, right? And then add up everything and get an average for those stocks, basically. So we get the pulse, the beating pulse for that particular stock, basically. Thank you so much for the questions. So that's how we get the upside, right? So over here, we can see Devon is the smallest among all the companies. So small does not mean bad, while big does not mean good, right? Bigger companies are safer, basically, right? So if you're going to retire, right, I think just invest in the bigger companies. But, if you want to take a bit of risk, if you are relatively young and you want to grow our portfolio, maybe the smaller ones, right? Okay. So over here, this is the, I know, these are all numbers. So this is the performance for Exxon, right? And we can see that as Exxon is a bit bigger, we can see that the total assets are very big, basically, right? It's in the hundreds of millions, right? One thing I want to draw our attention to is we look at the total liability. Liability is what we owe, it's debt. And total equity is cash that the company owes. The more equity the company has means they have more cash, or that's how I like to look at it. Equity. Equity is owner's equity, right? So this is what the owners have within the business. So there is more owner's cash within the business as opposed to liability. So if it's a negative amount, this basically means it's a good sign, right? There are more equity compared to liability. The next thing I would like to draw your attention to is if you look at the profit margins, over here, the profit margins are single digits. What margins are is basically how profitable the companies are. The bigger the margins, the more profitable it is. So if you are integrated, since you're doing everything, right, your margins will be much less, right? Safer, but your margins are less. All right, so this is the next one, right? We can see over here that this is the second biggest one, right? The last one we're going to look at is Devon, right? So this is, in terms of size, this is an upstream player, but this is the middle tier one, basically, right? Or in terms of market cap, right? So over here, we can see that they have a little bit of liability. The liability is bigger than equity, meaning to say there is more shareholder money within the company, right? So compared to the liability is a little bit more than the equity. So that means they borrow a bit of money to operate. So basically, does borrowing money mean that it's bad for the company? No. And why? If I can borrow 4%, and if I can make about, over here, you look at the profit margins, 17%, 22%, 17%, 23%. I borrow 4%, I make about 17%, or I make about 23%. So sometimes borrowing may not be a bad thing. Could be a good thing, right? So over here, we can see that compared to the big boy, Exxon, this one, the margins are a lot bigger, right? But when crude oil prices were to go down, you see this is negative 14, right? Exxon is about negative 12, right? But the margins are a lot better, right? Last is Devon. This is one of the smallest players. This is an upstream players. You look at the total assets, it's only 19.57 billion. I mean, it's still a lot lah, 19.75, right? And then we could see that the asset also grew by 21%, right? The next thing I would like to point out here is that they have a little bit of borrowings compared to their total equity, right? They have borrowings all the way. But if you look at the margins, they have the most attractive margins compared to all the other oil and gas guys, right? So again, it's up to you how you guys want to invest your money, right? Bigger is safer. Smaller with better margins can give you more of a swing. So if you look at Devon, right? You look at it, look at how it swung up and swung down, right? And if you look at like Exxon, right? The swing is there, but it's not so significant, right? So I told my research assistant to extract for 2 years, right? Within 2 years, you could see that it was 103 for Devon. Not bad, 50% per annum, right? So it's still okay, right? Even though you made losses, but you know you're still in the black, basically, right? So basically, what I'm trying to say is this stuff. If you guys want to take a bit more risk, you can always invest in the smaller cap guys. Smaller caps will give you a larger swing. If you guys want to invest safely, buy an ETF. An ETF is a basket of stocks, right? So remember, if you have 10 stocks, right? If nine stocks does well and one stock does horrible, right? You're still okay. But remember, if you buy an ETF, because you have so many stocks, right? If 9 stocks does okay and one stock does well, it will not move the ETF so much. So always remember where you stay, right? And I guess what I'm telling you is I'm showing you proof that the more risk you take, the more returns you may get. That's basically it, right? All right, so over here, should you guys decide to trade lah, basically, or buy anything lah, I just wanted to show you how to do it real quickly. Open your app, press this blue trade button. From the blue trade button over here on your search, you type the name of the stocks, COP for ConocoPhillips. Over here, click the trade button, and then you can buy the stock, right? So that's a small little recap. And because you guys stayed throughout the whole webinar, I got a small little surprise for everyone over here. If you were to put your camera, or if you were to type this link address, right? Use your phone, look at the QR code, scan it, right? We have this web version of the app. We have a web version of the app. All the numbers which I extracted a while ago, remember this, especially the analyst calls on certain stocks are on the web platform. If you guys want to try it, please do use this particular link and also use the QR code, right? So it's MIDFinvest.my, right? So over here, you can actually see all the analyst calls. This will help guide you even better to make better decisions moving forward, right? So it is a small little surprise. I like to, give you guys, I guess, small little surprises here and there. And since you guys are over here, please do give this a try. And also a small little favor from me to you is basically, we could you maybe type in the comment sections? I don't know. Okay, over here. If you can scan this QR code, I would like your help to answer the questionnaire. And from the questionnaire, I would like to know how we can further improve our webinar. So in the questionnaire, I'm asking, how often do you guys want this webinar, right? First question, what do you guys want me to cover, right? Because a lot of this is taught by me and my team, right? I want to hear more from you guys. I want to make the webinar better. So therefore, I'm asking you guys for help. And I want your investment journey to be a successful one. So if you guys can help answer these questions, number one. And if you guys want to look at the analyst calls, right, is this particular QR code and this particular website address. Right, it's 9:31 already. Wow. Every time when I do a webinar, so much of fun, right? So if you guys have any questions, I'll probably take 1 or 2 questions. I know it already passed my time. I sincerely apologize. I'll just wait for a couple of minutes. If there's none, right, let's wait for a while. Okay. So I know it's a lot. I know there's one QR code here and there's another QR code there. And I'm sure you guys are trying to scramble, trying to figure out how to fill up all of this. I know this. I've been trying to fit all of this in 1 hour. But for me, I think the most important is for me to share with you this particular idea. As the markets get a bit more volatile, as inflation hits our markets, what do we do? Do we invest? What do we invest? Right now, a lot of people are feeling very, I guess, nervous basically. And I wanted to push that point across. That's why I took more time to explain what we can do right now, especially during these turbulent markets, right? So if you guys found this helpful, put it in the form. If not, I'll hope to see you guys in the upcoming webinar. With that, good night, guys. Take care. And I hope to see you guys very, very soon. Take care.